Hey, it's Clay Trader, and this will be a video chart on ticker symbol NWBO. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and in this situation makes mapping out a very logical question quite straightforward. And that question revolves around the fact that today was just a crazy day. To think that the price gapped all the way down here and got as low as that, and then the bulls just came roaring back with this big bounce, I think everybody would agree this here was a big bounce. But is there any sort of true power behind this bounce? Is there any sort of genuine strength? Or is this just some sort of knee-jerk reaction, dead cat bounce type movement? Or in other words, just a fake bounce? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it revolves around a single level. And that's why I love charts, makes things very straightforward. So, whoops, let's try that again. I only need one green line. And that level is right here at 46 cents. Why is 46 cents so important? Well, actually, let me zoom up the chart here a little bit to give a little bit more context. There we go. Well, let me take a step back. I'm assuming we can all agree on the logic that movements with true strength, bounces that are true bounces, the price is going to continue forward. The price is not going to go back to where it was. Again, I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about 46 cents. Any sort of closes below it, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting it not only, back in this range here, but it's putting it way back here where it was at that portion of the chart. Again, going back, not a sign of true strength. Whereas let's say the price heads down here. I'm not saying it will, but let's just pretend it heads down here, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set of lows down there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's what truly strong moves do, right? They make progress upwards over time. So 46 cents in my mind, very important level of support. Ideally speaking, hey, Clay, what would make this chart look the absolute strongest? If the price can hold up above 54 cents, that would by far make the chart, the strongest looking. But I'm not saying that the price drops below 54 cents, that everything's ruined or anything like that. So as it stands right now, breaking levels of resistance, not really even close to the top priority. Right now, key thing is just build some higher bases. And when you have higher bases, that's where those, long-term trends turn into actual long-term uptrends. So we'll see what the bulls have in store. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interested in and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.